Inflation is a silent budget killer. It causes everything to go up, from your groceries to your gas, as the purchasing power of money decreases. During a good year, it cuts your buying power by 2% to 3%. These days inflation is hovering above 8%, a level we haven't seen in 40 years. But what does that mean for you? With inflation running rampant, it's affecting more people, but you don't have to sit idly by as your bills keep getting bigger. There are steps to take, and actions to avoid, that can help you navigate this period of high inflation, for however long it lasts. Regardless of what your personal situation is, it's always a good time to reassess your financial decisions to ensure they align with your goals. The best ways to beat inflation is continue investing. Investing the cash flow you have, outside of your emergency fund, is one way to keep up with or even outpace inflation. When you see rising interest rates, a falling stock market or ballooning inflation, it can cause you to second-guess yourself. But a good diverse investment plan should be set up from the start to deal with ups and downs. While you want to pay attention to what's going on, investing for the long term is key. Here are the 8 best investments at the time of inflation. 1. Gold and other precious metals. Another time-tested method of protecting against economic downturn is to invest in precious metals such as gold, silver, and platinum. Historically, these assets have shown a high degree of resiliency during prolonged periods of inflation. Investing in precious metals can also help diversify your portfolio if it's comprised mostly of stocks and bonds. Precious metal investments do have a major drawback, however, they do not yield any income. When interest rates rise, which often happens during periods of inflation to combat the effects, precious metals can significantly underperform financial securities. If you want to make ongoing investments in precious metals, you can do it in a few ways. Metals can be purchased directly, but the storage costs can be prohibitive. Alternatively, you can gain exposure indirectly by investing in diversified, metals-focused funds. 2. Cryptocurrency. Bitcoin is often described as digital gold, and theoretically should protect against inflation because of limited supply. Bitcoin has plunged in value this year, weakening the argument often made by crypto enthusiasts that it can be an effective hedge against inflation during times of economic turmoil. Bitcoin advocates have long argued that its scarcity would protect its value during times of rising inflation. Unlike central banks, which can increase the supply of money, there are a fixed number of coins, which keeps them scarce. 3. Stocks. Stocks can be good as a long-term inflation hedge but can suffer in the short term if inflation spikes. The market price of value stocks is usually directly proportional to the rate of inflation. Therefore, when the inflation rate rises, value stocks tend to perform better. On the other hand, growth stocks have minimal cash flows. Therefore, they have a negative correlation with the rate of inflation. Many experts recommend investing smartly to hedge against inflation. 4. Short-term bonds. Keeping your money in short-term bonds is a similar strategy to maintaining cash in a CD or savings account. Your money is safe and accessible, and if rising inflation leads to higher interest rates, short-term bonds are more resilient whereas long-term bonds will suffer losses. For this reason, it's best to stick with short to intermediate-term bonds and avoid anything long-term focused. Make sure your bonds or bond funds are shorter term since they will be affected less if interest rates begin to rise quickly. 5. TIPS. TIPS stands for Treasury Inflation Protected Securities. While the term may seem like a mouthful, TIPS are actually quite simple to understand. TIPS are government bonds that mirror the rise and fall of inflation. So, when inflation goes up, the interest rate paid does too. And when deflation occurs, interest rates fall. Adding TIPS can help balance out your fixed income or bond portfolio since they're indexed to inflation. TIPS bonds pay interest twice a year at a fixed rate, and they are issued in 5, 10, and 30-year maturities. At maturity, investors are paid the adjusted principal or original principal, whichever is greater. 6. Real estate. Real estate traditionally does well during periods of higher inflation, as the value of property can increase. This means your landlord can charge you more for rent, which in turn increases their income so it is on pace with the rising inflation. The post-pandemic era, however, may change how real estate responds to higher inflation. Fundamentals are somewhat in question because of the long-term effects of COVID. Demand for commercial real estate, such as office and retail spaces, is still in limbo as more companies are adopting remote work or hybrid models. 7. Commodities. Prices for raw materials like oil, metals, and agricultural products usually increase along with inflation, so they can be a good hedge against it. Investors, however, should note that commodities can also be extremely risky. The prices for commodities depends largely on supply and demand, which can be highly unpredictable. This makes them a risky investment. On top of investors taking on leverage, the chance of rewards are high, but so are risk of the losses. 8. Equities. A final asset class that can protect against inflation is the collection of publicly traded equities, commonly known as stocks. Essentially, this asset class gives investors the ability to buy a proportional ownership stake in virtually any publicly traded company in the world. In a general sense, cyclical stocks, which move in tandem with the overall economy, are the most effective at battling inflation. Even stronger are investments in cyclical stocks that also have high growth potential. The relatively high return potential and pricing power of these types of companies can easily reinforce the real, long-term value of your financial portfolio. However, you must be prepared to withstand the short-term volatility that equities tend to exhibit. Investors have options to protect themselves against inflation, but the safest bet is through tips. Otherwise, use an inflation surge period as a good time to review your overall investment performance and allocation to make sure it aligns with your goals. Don't make dramatic changes based on current inflation or market conditions, since most of us are still long-term investors. Thanks for sticking with me till the end of the video. Please like the video and subscribe my channel for more contents like this. See you in the next video.